What's up, you guys? Zoeb here from OneGlanceTrader.com, and in this video I've got another pivot point strategy that I'm calling the missed pivot rollover strategy. So what I'll be talking about in this video is going through what a missed pivot actually is, the indicators you need for the rollover strategy, some example charts looking at setup, take profit and stop losses, and then I'm going to walk you through my kind of live trade that I've got going on at the moment, just to walk you guys through a real life example of my thought process of where I put my stop loss and take profit targets. So what exactly is a missed pivot? So you guys know in my previous videos that I've been going crazy about pivot points, and one thing that I've been looking at is what happens to price when pivots are not actually hit. So for example, whether you've got a daily pivot, a weekly pivot, or a monthly pivot, a missed pivot simply means that during the duration of that price action, so let's call it a daily pivot, for example, in the day that the pivot was formed, price never reached its daily pivot. So in a week, it never reached its weekly pivot, and a month, it never reached its monthly pivot. So an example of this is on the chart now. I've got my OGT pivot point indicator, which I'll go into inside a second. But you can clearly see here, it's on a daily pivot point, that this pivot point that was formed during the day of the price action, you can clearly see price never touched it. And again, yesterday you can see yesterday's daily pivot point, price never touched that area. So why is this important? So as you guys know in my previous videos, and you can clearly see on the chart that most of the time, as you can see, the pivot point gets hit. It's in the high 75-80% of the time. So I'm quite interested in understanding what happens to price when pivot points are not hit, and how we can use that as part of a strategy. So in my visual back testing and other research that I've done around missed pivot points, is what will tend to happen is, if we take daily pivot points as an example, within 2 weeks of a missed pivot point, price will eventually move to the area where that missed pivot was. And in this particular example, the example I'm going to show you is that we've got a missed pivot here that happened 1, 2, 3, 4 days ago, and then eventually price got to that missed pivot point. And it's this little element that I've built this strategy from, of how we can utilize missed pivots as potential take profit targets for trades. So what I want to do now is, I've taken a screenshot of this GJ chart, 30-minute chart, and I'll walk you through the kind of rollover strategy. But let's go into the indicators first that you need, and everything you have for this strategy is on this chart. And what you can do is, the first link in the description, you can just download the template, because I know there's a lot of moving averages on here, and the moving averages will be inside the description, so you guys can note that down. But if you just want the template, you can just download the template. So on the chart, you've got a number of moving averages, which helps us identify direction. We've also got the linear weighted moving average, and then we've also got the OGT pivot point indicator. So all of this stuff, so moving averages comes part of the MT4 terminal. The pivot point indicator and the MACD LMA indicator, you can download, links on the description, absolutely free. And then just to let you know, the settings I've got for the OGT pivot indicator is the daily time frame, and all I have on is the pivot point line, and nothing else. Don't have any of the R resistance and support levels printed on the chart. So that's what we've got, and what I've done is I've taken a screenshot of this probably about an hour ago now, and I'm just going to share it on the screen. I'm just going to walk you through the missed pivot rollover strategy. So the first thing we need to do is, once you've got your chart set up, is that we need to wait for a daily missed pivot, and which is signified by this one over here. We also, as I mentioned earlier, we had this one over here, so this is a potential setup for the future, but I just want to walk you through this particular example that has already happened. So we've got that at the moment, and What we do then is we just wait. We don't do anything at this stage. We're just identifying a chart of interest where there's a mispivot. Once we have the mispivot, what we're looking for then is looking for signs of a reversal. So in this case, we're looking for price to start to turn bearish. And again, there's a number of ways, and I've talked about this on the channel about Confluence, and a number of things that you can look at to be able to find these kind of signals for a potential reversal. One of my favorites is Divergence, whether that is regular or hidden divergence. In this example, we've got classic regular bearish divergence. So you can see that price is making higher highs and that the MACD is making lower highs, again giving us an indication or an early warning sign that price wants to reverse. Another way that you can look to see what's happening is the order of the EMAs. So the moving averages, when they're in a certain order going up, therefore you're in a nice strong trend, and the further away the moving averages are from each other in their particular order, um, the stronger the trend. And then as you can see over here at this point, which is where I've signified by the 2B, you can start to see that the moving averages are compressing together. And what I'll do is I'll link to Dol Guppy's MMA or GMMA trading strategy, which I've got on my channel as well, all about short-term and long-term moving averages. So these moving averages are the long-term moving averages over here. And one thing that I should bear in mind and let you guys know that the time frame to trade this on is, in my opinion, the 30-minute chart. So the 30-minute chart is your entry kind of signal into this. However, in terms of looking at charts and mispivots and stuff, it doesn't matter the time frame. But I find that the 30-minute time frame has the right amount of movement to get you in early enough into a kind of potential reversal. So again, so all we're looking for at this stage is for signals or for potential elements that price may be, and this is where the rollover piece comes in. And what you're looking for is price to start rolling over, in this example, to the downside. And then when price starts to show you indications that price is looking to reverse, and you've got different confluence factors by divergence and moving averages starting to unalign and starting to compress close together, depending on how aggressive you want to be, you then enter in the trade based on where you feel most comfortable. So for me personally, I have to have divergence. Once I've got divergence, I start looking for where the moving averages start to fan out in the reversal direction. So around this area here, around this high of this this pullback over here, you can start to see where the moving averages start to fan out in the reversed order. Whereas in this example, we got the moving averages going up, and now we've got them down, all in a straight line, no tangling, no nothing. And that would be for me an indication of where I would like to kind of enter the trade. So then once you placed your entry, or before you place your entry, you need to look to see where you're going to put your stop loss and your take profit target, because as everything, you've got to have a minimum of 1-to-1 reward to risk. So from a take profit perspective, the goal is to get to the missed pivot level, and this is the whole beauty of this strategy, where your kind of main target wants to be. But as I mentioned in previous videos, is we don't want to set our take profit target at the pivot level. We want to set it just before the pivot level, just to give us an even higher probability that price can make it 3/4, halfway, depending on where you put your stop loss, to its pivot level. So where I've looked at it over here, there's kind of two ways you could have done this. And the first one is this green line is where a psychological level was. So that is a good place to kind of put your take profit target. And I'll show you in one of the other trades that example trades that I took to show you that particular example there. Or you could use previous support and resistance zone. So this zone over here would have been pretty good, which is just before the actual pivot level there. So again, there's a number of ways that you can kind of look to set your take profit target, or depending on what time you get into the trade, the daily pivot may also be a good level, as you can see here that this was also comfortably hit. Today's daily pivot. And then from a stop loss perspective, again, you've got to calculate it from a reward to risk, but again, you either try to look at it above these highs, above this congestion zone, above all these EMAs, which will also act as resistance in this particular example, or even above the kind of miss pivot levels as well. All these different areas that you can use for stop losses and take profit targets. So again, I really hope that kind of makes sense. And again, we're looking at a reward to risk ratio of 1 to 1 from there. So what I wanted to do now is just show you two other examples on the chart. So the New Zealand dollar and the Canadian dollar is one that I took this morning. And again, they're all bearish trades actually in terms of where we are. So we've got a missed pivot here that was formed yesterday. And what I loved about this trade is not only did we have bearish divergence, price making higher highs and MACD making lower highs, we had this double top formed over here, and I got in just at the early hours. So around this level here I got in. I had my stop loss just above this round number area and pivot level. What I liked about this is that today's pivot is just at the round number level, and as you can see, price is currently stalling at that level now. So my stop loss was just above this area, and then I was targeting. In this example, I actually targeted the pivot level because, and again, this is textbook stuff where price then clips the round number level and then shoots straight back up. So, I managed to capture some of this move over here for a nice 1.2 reward to risk. So that was a good trade. I really like that trade. Classic setup here, and then this is a small trade that I'm on now, and I'm just going to clean this up slightly, so just to make life a bit easier for you guys. Again, very simple things around here. Pretty much the same. You've got your missed pivot over here. You've got price making higher highs. You've got the MACD making lower highs, and again, similar to the other one, I got in around this level just when price touching the current pivot level. I had enough on here. I think this is about a 1.1 to 1.2. Decided to go in just above these highs over here, and if you look at where my stop loss actually is, it's just below this round, just below this or above rather this round number level, and the pivot level is over here. So again, we're starting to see that congestion. The moving averages is kind of pointing down. It did kind of go up to this level. It's using this round number level as a support level, and price is starting to drift down. So what I'm expecting is for early next week now, because we're nearly at the close of the London close is coming up shortly. That the price will start trickling its way down to this level over here. So again, that was just another example of some trades that that I've taken. But again, when I look back and kind of back testing, here's another perfect example over here. Look, we've got one missed pivot here and another missed pivot there. Again, you've got your prices making lower lows, and then MACD starting to make flat to higher highs. And again, you can see here that this pivot level was hit the next day, and then the day after, or in the same day rather, both missed pivots from the week before were hit. So there's a very high probability within, especially daily pivots, within a couple of weeks of a missed pivot, that the price will go back to the missed pivot level. So again, this would have been another classic example trade of when to get in to kind of hit these pivot levels. So I really hope that this is starting to make a lot of sense, and I'll try to do some more videos with some more trade examples of me placing on trades here at the moment for you guys to kind of see how this kind of strategy works. So I want you guys to have fun with this. Please subscribe, please tap that notification bell, and if you really are liking the content I'm producing, really appreciate if you would like this video. So I've got on the screen now my thumbnails for all my other pivot strategies and the playlist on there. I strongly suggest you have a look at that because there's a lot of good ideas and good concepts in there, and I shall see you guys shortly in the next video.